Hello traders, welcome to the channel. My name is André Cardoso. Thank you for being here. As always, it's a pleasure to share my work with you, specifically with those who are learning process. I believe the channel may bring you some value for that learning curve. I search for patterns to trade. Most of you are already familiar with the patterns that I tend to search for. Advanced pattern formations like the Gartley pattern and the cipher pattern formation, but also the most basic patterns we may find inside the markets, like the ABCD pattern, the cup and handle, the heads and shoulders, double tops, double bottoms, whatever. So any pattern the market prints for us, I'm trying to identify those same patterns and applying a risk strategy, and I share those events or those patterns with my subscribers on Discord, which I invite you to join. So for today's video, I want to cover a couple of charts with you, just to keep you updated with those patterns, and talk about possible events that may, or possible patterns that may emerge during the next sessions for the next week. So today it's Friday, and unless the price prints some violent moves, I'm not seeing any specific pattern to pay attention to at this point. Just a couple of them that I will share with you now. So for the cable, I shared this eventual cup and handle formation, so we still kind of forming the handle, so we're still trading inside the range between the recent support and the previous high, so we're still trading inside this what we may call the handle formation process, even though I also shared with you the bearish shark pattern completed at 123.93. So that pattern suggests a move towards the 50% Fibonacci level. As I said before, 121.45, so we're still holding that short position for the cable. We expect the 50% Fibonacci retracement to be reached. If that happens, we may see also another pattern emerging, one eventual crab pattern, if we take into consideration the recent price behavior. So we have these recent Fibonacci ratios presented, or the variables presented inside this range, may also point to another pattern projected at the same price zone. So we have this convergence between the default target zone for the shark pattern, but also the eventual bullish crab pattern projected at the golden fib. But not only, because if you consider this eventual technical double top, which will only be confirmed, by a violation of this fractal support, that also points to the 200% Fibonacci extension, which nails the 50% fib, which is the default target for the shark. So we have three elements in convergence at this price zone. We may have 100 and the price will not trade at those levels. Okay, be careful, because we are only speculating, taking into consideration just a couple of variables. One of them, the most important one, the default target for that pattern completed above. So I still need to see the cable falling into this price zone in order to say that shark pattern was completed and it achieved the default target zone. If that happens, of course, one thing guides us into another. If the price approaches the default target zone, that means the price violated the support, breaks the support, triggering the double bottom, the double top, in fact. We have targets for that double top projected at the same price zone. And of course, once achieved, we have this bullish shark pattern or bullish crab pattern also projected there, which may imply a bounce and a retest of this previous structure support. So usually, and the same may happen. So we will target the Fibonacci retracements if that happens, if that pattern emerges at this low. So, and we will target the 38% Fibonacci retracement. As we can see, we have perfect convergence between the default target for that crab with the previous structural low. So don't be surprised to see the next sessions the cable being pushed lower, eventually to this previous structural support, breaking the support, completing that pattern, and then a bounce and a retest of this broken support again. So that's the natural process that I'm expecting to see. But as I said, it's a step-by-step process, and the most important one, the bearish shark pattern completed there, which we still holding to the downside. Of course, any move above the resistance, if the price remains above this weekly fractal, that may trigger a major move to the upside, mid-long-term process for the cable towards the 200% Fibonacci retracement, tracking that move towards 130. Euro versus the dollar. The levels that I'm paying attention to are exactly or practically the same. The recent support at 108.50 moves below this support may help the formation of this bullish shark pattern at the golden fib. That will trigger the edge and shoulders pattern formation. As we can see, we have the left shoulder, the head, and we are now forming the right shoulder pattern, or the right shoulder for the head and shoulders pattern formation. So any move below this daily fractal should trigger a move towards the 200% Fibonacci extension, 107.87. We have also the shark pattern projected at 107.76. That pattern will suggest a bounce towards the 50% Fibonacci retracement, converging with this previous support, or the recent support, the recent fractal support at 108.50. So basically, the violation of the support will trigger the edge and shoulders. The edge and shoulders have default targets at 107.89, which will help the formation of the shark pattern, and that pattern will suggest a move towards the previous support and a retest of this broken support level. Of course, I don't need to say the breakout above the resistance, and because we can be wrong on speculating, but any move above the resistance, of course, that may help also the formation of other patterns, and specifically a crab pattern projected at 109.79, and the same will happen. The formation of this pattern will suggest a retest of this previous resistance price zone. Targets the 38% fib. As we can see, both patterns nailing the previous structural lows or highs. So if the price prints the crab, it will target the resistance. If the price prints the shark, it will target the support. So pay attention to those levels. Don't you dare to push a trade inside this range that we have between those fractals. We don't know what will happen there. I don't know how long or how much time the price will need before abandoning this price zone. And because there's no edge to trade inside that range, I prefer and I suggest you to stay away unless the price starts to react to some of these patterns. Aussie, I shared this morning the potential 3 drives pattern formation. We have the first high, we have the second one. If the price pushes to a new higher high, that may help the formation of a 3 drives pattern, and that pattern will then suggest a move towards the lows of the pattern, the bottom of the pattern, which means back to the previous daily fractal support, and that's what we have for the Aussie. Of course, if you are searching for opportunities for the long side, we have this cup and handle formation, and I will expect at some point, if the price pulls back again to this previous support where it has found support before recently, actually right after the breakout we have found support at the highs of the cup, but we are now forming kind of a three drives pattern formation, so it requires a new higher high. If that happens, we can try to search for an entry to the downside. I'm pointing to 71.59 for the completion of that sequence, taking into consideration the default, not the default, but taking into consideration, let me zoom in, the previous extension used to find resistance. So this is the 127% Fibonacci extension of this swing to the downside, so this pullback. If we measure an extension of that swing, and if we search for the 127, you can see the price then finds resistance at the 127 before pulling back again. And so the price pulls back, and if the price trades again to the 127 extension of this last swing low, so we measure the last swing low and we project the 127% Fibonacci above. If the price finds resistance right there, I admit the formation of that three drives pattern, and we need to admit that pattern will target the previous and the bottom of the pattern, previous support and previous structure resistance in fact. So that being said, if the price then finds again support here, I will not be surprised to see let's say a move towards a 200% Fibonacci, 7203. That is the default target for this cup and handle formation for the Aussie. The New Zealand, the Kiwi, very similar with the pound, we have this mega or higher degree cup and handle pattern formation. We're still holding below the previous structure high, so we have this kind of a flag pattern right there, or a triangle if you wish. So wait for a breakout of those levels to push your trades. Wait for a clear breakout above the highs or a clear breakout below the support. Eventually you want to wait for a breakout of the structure. We have a descending trend line covering the highs and a ascending trend line covering the lows, so we can wait for a breakout of this structure. But we have also those horizontal or these fractal support and resistance levels to guide us. So I admit that the breakout above these fractals should trigger a move to the upside for the Kiwi. The same way, or on the other hand, a breakout of the support should also trigger a move to the downside. Note that we're still holding inside these. We can increase our time frame here. We're still inside these, what it may unfold into as an ascending parallel structure. So we need to reinforce this structure during these bullish momentum. So if the price keeps trading inside this channel, it will be interesting to see and to follow and to track that price action. But for now, that's what we should pay attention to: the daily fractal and the recent support level for the Kiwi. Nothing very specific in terms of advanced patterns to project or to identify at this point. Just a small and simple basic pattern. Wait for a breakout above or the breakout below. CHF, just because it has found support at the golden Fibonacci level, we have a 61.8% Fibonacci at 91.60. Of course, if the euro versus dollar starts to fall, the CHF may start to rise. It may start to trade inverted with the euro versus dollar. If that happens, we should pay attention to a move towards this cluster box, which will complete the symmetrical kind of a ABCD pattern, and that's it. So if the euro versus dollar starts to pull back again, we may see the CHF trading higher. We are now threatening the recent resistance at 92.25 exactly. So a breakout above this fractal may force a retest of the previous highs, and then we will pay attention to to the formation of that pattern. Of course, the best opportunity to search for the long side of this trade, it was below the golden fib. So as soon as you see the price starting to bounce from this price zone, we can try to take advantage of an eventual move to the upside, protecting our trade with stops positioned below the point A and the starting point of this eventual ABCD pattern. But since the price has found support at this important Fibonacci level, the 61.8, 61.8% Fibonacci level, I will not be surprised to see another swing, a third swing to the upside, and the formation of one symmetrical pattern above. But as I said multiple times, I can speculate a lot and project patterns below and above, but I never know the outcome and where the price goes. I need to see those patterns starting to emerge, and then we will react accordingly to those same patterns. And I will show you a couple of them that we reacted to. So this is the New Zealand versus the yen, the Japanese yen. I shared before the possibility to unfold into a double bottom. So we have this technical double bottom for the New Zealand versus the Japanese. That makes this resistance the next zone. So it was already retested. We have a daily fractal at 84.80. So we need to admit that a violation above the recent highs, 84.90, will trigger a move to the upside. Of course, we need to see a clear move. So a clear move implies a retest of this zone before jumping into a trade to the upside. Wait for the price to reject this price zone again, turn it into a support. So we have already, let me just clarify this for you. So we have this daily fractal, but we have already a fractal support printed there at 84.90, as I said. So basically we need to see that resistance turned into a support, and if that happens, we may see a move to the upside. But I just want to call your attention to this chart because we are approaching this price zone or the next zone again. We can also plot this with a trend line resistance right there. Be careful, because, and the reason why I always call your attention to the breakout point is because you don't need to rush, and you just need to wait for the pattern to be confirmed. If you try to push a trade from this price zone to the upside, there's a risk that we spend a lot of time inside this range or this channel, or a descending channel. Somehow the pattern will start to form a price structure. So if this is a channel or a flag or a wedge or whatever the price needs to print, if you push a trade before the breakout, we may find ourselves inside a disgusting range and holding our trade while the price keeps trading against us. So don't try to rush before the pattern validation. Euro versus Aussie, the same may happen here. Edge and shoulders pattern formation. We are now threatening the previous fractal support. We are also threatening the next zone. If we draw kind of a next zone like this, even though we need to see a clear breakout of the support level. At this point I have a symmetrical ABCD pattern projected at 151.38, and this is the pattern that I want to share with you. So this is kind of an ABCD pattern, a symmetrical pattern, because that pattern will threat the violation of this kind of a next zone, but it may also force a retest of it again. So eventually, if you draw a trend line right there, if you see the formation of this ABCD pattern, we may see then the price starting to threat the recovery after a drop. Okay, we have also the 200 moving average approaching at 151.36. So just pointing just a few points below this default projection for the ABCD pattern. But as I said before, a clear move below the support may also trigger this deeper pullback back to 46.91. The same pattern may emerge for the pound versus the Aussie. We are now threatening the lows and the next zone. This is much clearer than the euro versus Aussie. We have kind of an horizontal and very clear support for the neck. We have a clear right shoulder. So I admit also for this one a move to the downside towards 68.46. If you start to track the possible ABCD symmetrical pattern that also points to kind of the 50% fib 70.96 kind of, but as I said, so we have kind of a symmetrical patterns also for this one, for the pound versus the Aussie, but I will not be surprised to see a deeper move towards the 200% Fibonacci. That completes also the ABCD pattern, but instead of a symmetrical pattern, it will not be so symmetrical. We have the point D of that pattern extending a little bit. The same will happen for euro versus dollar, just because we have a symmetrical pattern there. I want to pay attention to this price zone, but that doesn't mean the price may not extend or be pushed even lower. So pay attention to that possibility. And because we have also the golden Fibonacci at 49.29, so that's also a nice price zone to pay attention to. So, but if you trade the patterns, probably this is not the most clear one to try to trade. Probably the pound versus the Aussie is much better in terms of technical approach. But both of them should trade to the downside with the broken support. So in those are the patterns you should try to take advantage of. Not eventually if you want to try to take advantage of a symmetrical pattern, but even though you need to observe the price action once the price approaches this level. And even if that pattern, the ABCD pattern, unfolds and starts to work for you, that doesn't invalidate the possibility of more downside momentum later. So we may see a reaction to that symmetry. Then the price may find some support, some resistance at the previous support level or support trend line, and nothing assures the market will not keep moving down after that. But as I said multiple times, we never know the outcome. If you want to trade the patterns, wait for the violation of those levels. Specifically for the euro versus Aussie, we have a weekly fractal support at 152.56. So I admit that a clear violation of this level may trigger a move to the downside. 46.91, as I said, it's a default target for that one. And for the pound versus Aussie, 68.45, which is the equivalent to a 61.8% Fibonacci retracement. So it's that confluence between the golden Fib retracement and the default target for the head and shoulders. Now let's finish with crude oil, because yesterday I called your attention to the eventual breakout of this resistance, the most recent one. So let me tag that resistance for you. So we have the recent highs at 82.41. So I admit that the violation of these levels may trigger a move to the upside. We have the Fibonacci, we have the first Fibonacci retracement level from the previous highs, 131.30, projected at 84.67. So this is the very first Fibonacci retracement level, converging with a minor 61.8% projected at 85.804. So I didn't post this Fibonacci retracement yesterday, but today I start to track this possible convergence between those Fibonacci levels for crude oil, specifically the breakout above the 50%. We are now threatening that level, and if that happens, a move towards the next Fibonacci levels, which implies or which suggests also a move towards the top of this or the highs of this ascending channel for crude. So pay attention to a breakout above 82.41 for crude oil, which may trigger a move to the upside. And to finish for the week, we have also the Nasdaq. The Nasdaq, I shared the bullish 26 pattern with some of you before. I can't remember, this was a chart from December. This was a trade from December last year. I shared this one with my subscribers, expecting a move to the upside after the formation of the bullish 2618 trade setup. So we saw the price threatening the lows, then forming the double bottom, triggering the double bottom with a violation of this neck zone, and since then we saw a huge move to the upside for the Nasdaq, which is nice for us. So basically we are already approaching our first target zone, and that's the reason why I'm sharing this video with you today, because if somehow for some reason you are holding your longs for the Nasdaq, this is the level where I consider to start to break even my trade and start to partitioning my trade. So we are talking about a 10% move above our entry, 10.2% above my entry. So this is 11K075. So I shared this with my subscribers. Let me try to where did I post that one? Let me try to show you this one. As you can see, we have this bullish 2618 completed at 11K100 to suggest a bounce from the current price zone. If you click this chart, you can see we were trading at 0.74, so I suggested the move towards the previous highs in fractal resistance after the formation of the double bottom and the bullish 2618 as a sequence, depending on these double bottom pattern formation. So that being said, as you can see, a very nice move to the upside, and this was shared, I don't have a date here, this was shared, I believe, December. This is a trade from, let me try to see, from 20 December. As you can see, I pushed this one the last week of the month, and well, only now we are approaching this level. So this was kind of a mid-term position to the upside for the Nasdaq, but the most important thing that we need to take into account at this point is that once we start to approach these fractal resistance, we should start to partitioning our trade, closing a portion of our initial position size, and most important or as important as that, closing a portion of our trade, it's to break even your positions, your positions, secure your trade, move your stops from the lows, and move them to your entry zone or your entry price. That allows you to manage your trade to the upside. If the price keeps moving to the upside, that will help you to maximize your profits. I have a second target then projected at 12K857, so that's my second target, and if the price achieves that target, then I will activate a trailing stop, which means any move the market prints above my second target, if the price moves, let's say 3.6%, I will expect my stops to be automatically adjusted in the same magnitude. So if the price moves, 3% above the second target zone, my stops will be automatically moved with a trailing stop to that same magnitude. Okay, if the price moves more 5-7%, the same magnitude will be followed by my stops, and from break even at some point my stops will be adjusted automatically, taking into consideration the moves above my second default target zone. So that's what I want to share with you for the Nasdaq today, because I think it's important not only identifying the patterns at your validation points or your targets, but it's also important to define the strategy you will use to manage your trade. What you will do once the price approaches your first target, what you will do if the price approaches your second target, what can you do to protect your capital as soon as possible, how can I maximize my profits without the need of being here minute by minute trying to see where the price goes. So I believe it's important to understand how can we create a strategy to manage our trades. And by default, I'm using this strategy for 10 years already. So at the first target, close half of the initial position size. So if you start to trade these with, let's say, 2 lots, let's imagine you use, I believe some of you use MetaTrader platform, so you trade in lots. Usually I trade in units. It's a bit different, same thing but different approach. But imagine a situation where you enter the market with 1 unit or 2 lots or 1 lot or whatever. I always advise, when we achieve our first target, we close half of the initial position size. Okay, so that's what I suggest. At the first target zone, close half of the initial position size. That means from 2 lots or whatever the amounts of units you trade, you go to 1 lot. You close one and you keep the other one. And the same will happen if the price achieves your second target. You will close another half portion of the remaining. So if you have 1 lot remaining, close 0.5 and hold the other one. And then you can scale that position over this process. If the price decides to trade even higher, you can keep partitioning your position or keep holding that 0.5, the last portion, keep holding that trade until your stop being hit. So if you use the trailing stop, as I said before, as soon the price touches my second target, I will put my trailing stops. At some point the price will be hit, that stop loss will be hit at some point, or you will close your trade when you feel that's enough, or you feel the price may find some resistance or strong resistance. We may start to fall, and it's time to close your trade, and you will close your trade. But usually, just to recap and to finish this video for today, usually this is the process that I suggest. So you start to trade with 2 lots or whatever, as I said, units you trade. You start to trade with 2 units. You close 1 unit once you achieve your first target. Keep half of that initial position size. As soon the price touches your second target, you keep reducing your position to 0.5, and you keep holding this position over the next moves if the price decides to go in your direction. I know there are people trading exactly the opposite. Instead of instead of starting to trade with 2 units, they start to trade with 0.5, and then if the price moves towards their expected direction, they start to increment and add more units to that position. So that's one option if you trade like that, if you prefer to increase your position size, increasing your amount of risk in a trade, because every time you push a trade, if every time you increase your position size, your stops are no longer positioned below your entry or at break even, as I suggest. So as soon if you start to increment your position size, your stops will be positioned right there when you start to increase your position. So basically, you need to be aware that if the price starts to pull back from those levels or from those first target and second target zones, you have your stops positioned there, or you need actually you have your entry for your trade is there, not here anymore. So once you start to increment or add position or add size to your position, basically you are creating a new position to the upside with your entry at those price levels. So basically, I'm not sure if that makes sense I'm not sure. I'm not here to judge anyone. Everyone makes what they feel it sounds better for themselves. I don't feel comfortable adding to my position size. I prefer to start with a small position, even if it is a smaller than usual. There's no issues with that. I prefer to start with an initial position size and then start to reduce, securing my trade at break even. Don't create other positions above it, because that, as I said, will open a trade with your entry at that price zone. And if I took the advantage of a specific pattern that gives me an entry below, why I will create other entry points at these levels for more trades to the upside? It makes no sense for me. I know it makes sense for a lot of people. In my opinion, I prefer to play safe and try to protect my capital every time or as soon as possible. And if I take into consideration the strategy that I share with you, I feel much comfortable trading, reducing my position size instead of increasing the position size. So this is my 2 cents regarding the strategy that I share on Discord. Of course, I invite you to join me there. I have a free chat for those who arrive the channel or they arrive the server. My main objective, of course, is to call my subscribers' attention to some of these price zones and these patterns. Of course, I have a private zone on my Discord server just for the subscribers. But I also share a couple of charts on the free chat that you have there. And then if you enjoy, if you embrace the process, you can always subscribe from Discord, from the chat room. You can actually make a direct subscription for the service there. So I invite you to join my Discord server, which I will put the link below in the description. So I hope you enjoyed this session for today, just to clarify some risk management stuff here with you. I hope you enjoy. If you enjoy, of course, press that like button. It's always important to get that feedback. And of course, I wish you all a very nice weekend with your families and friends. And I hope to see you next week. Next Monday, I will be here sharing more content and more patterns with you. All the best for you. Stay well.